Jeff, I remember at the start of the year when we were starting to do the podcasts, there was a few that you and I were on where we were talking about the US-Chinese trade deal, which was a hugely hot topic at the start of the year. And is there any update on that? I know we've had TikTok last week, but there was Huawei before that.
Yeah.
Where are we at with that?
I suppose and it's interesting, isn't it? At the start of the year and the fourth quarter of last year, Chinese trade deal was the dominant sort of factor that markets were concerned about. Trump tweeted about what was happening in the discussions. It was an important event. Markets reacted to it, and then you fast forward and we kind of moved on. But it's gradually, I think, as you were alluding to, Peter, it's been coming back onto the agenda over the past probably the past 2 months, I think, where geopolitical risks have started to come back into the discussion. And I suppose why is that? It goes back to one of the points that you're making there, that it's an election. Trump needs to sound off against somebody, and it's pretty convenient to sound off against China at this point in time around it. Where are we with it? Well, the trade deal was around intellectual property, technology transfer, various other aspects. But probably the biggest aspect would have been the agreement by China to purchase quite a significant larger amount of US goods, be that soy, corn, oil, and services. So that there was quite a step up in that. And when we look at how that has worked its way through, given the backdrop, it hasn't been that much. So I think they were to buy an incremental $120 billion worth of US goods and services. It's ticking up, but we're not there yet. So that's something that over the next couple of weeks, I think there was a communique came out a couple of days ago saying that they're going to come together at least and discuss how the phase one is going. And that will, I'm sure, be part of the agenda. It's probably interesting to think about that in the sense of, well, when this deal was agreed, probably that incremental purchases didn't actually mean that much to the overall US economy because it was kind of functioning at record employment levels pretty well. It was working. Whereas now, maybe these Chinese purchases become more important because US growth, global growth is weaker. It could be an interesting dynamic to see how China wants to move forward with that in the coming months and what comes out of some of these discussions that they're having.
Yeah, interesting. For all